Hi all. Today we are discussing another problem from retirement of a partner. The speciality of this problem is that here the retiring partner will be paid up and part of his capital account balance immediately in cash, and that will be contributed by the remaining partners in a certain ratio of sharing profit. Here in this question it will be as per the new profit sharing ratio. Sometimes it will be given in any other ratio also. Okay. So the retiring partner will be paid a part of the amount immediately in cash, and that amount will be brought in by the remaining partners in an agreed ratio. That is the speciality of this question. So here is the question. As usual, you can write this question in your notebook and can see how each items are taken while solving the question. Okay, how each adjustments are taken during its solution process. Here the balance sheet is given here for Jain, Gupta and Malik as at 31st March 2020, and says that the partners have been sharing profits and losses in the ratio of 5:3:2. Malik decided to retire from the business on 1st April 2020, and his share in the business is to be calculated as per the following terms of revaluation of assets and liabilities. So the adjustments related to revaluation of assets and liabilities are given here. Here given stock is revalued at rupees 20,000. Stock already we had 18,100. That means here it shows an increase in case of stock. Then office furniture revalued as 14,250. So office furniture we had in the book 18,250. That means office furniture shows a decrease. Then plant and machinery shows as 23,530. That means plant and machinery increases. Land and building became 20,000. Earlier it was 26,000, so 6,000 decrease. Then a provision of for rupees 1,700 is to be created for doubtful debts. Sundry debtors we have 26,700. For that we have to create a provision for doubtful debts 1,700 rupees. Then goodwill of the firm is directly given here. It is valued as 9,000. So we have to find out the retiring partner share of goodwill. That's all. No need of finding out the goodwill. Then this is the major adjustment here. The continuing partners agreed to pay rupees 16,500 as cash on retirement of Malik. So Malik is given 16,500 immediately, and that will be contributed by the continuing partners in their new profit sharing ratio, which is 3:2. That means Jain and Gupta is bringing 16,500 rupees into the business in 3:2 ratio. So we have to adjust this adjustment in their capital account. And the balance in the capital account of Malik will be treated as loan. So remaining balance after paying 16,500, how much is left? That will be transferred to his loan account. Now you have to prepare revaluation account, then partners capital account, and the balance sheet of the reconstituted firm. So this is the question, and we are going to solve this. So a revaluation account is ready here. Revaluation account is prepared, and in the question it is given that their adjustment stock increased. Stock became 20,000. So it shows an increase, okay, of 9,900. That is written here. Then plant and machinery also shows an increase, okay. So an increase of 3,300 we have to write, okay. Then next to office furniture, that is decreased by 4,000 rupees. That also we have to write on the debit side. 4,000 rupees. Then land and building, that also shows an decrease of 6,000 rupees. So that also written. Okay. Then given provision for doubtful debts. Provision for doubtful debts, 1,700 rupees is to be created. So it's a decrease in the value of assets or can be considered as, yes, liability. So that is written. So the adjustments in revaluation account is over. Now we have to balance the account. So debit side shows more amount, so we can total debit side, and that amount can be carried over to right side, and the balance can be shown here, 6,500 rupees. So this is, that means revaluation account shows a loss, so that will be transferred to the capital account of all the partners in their old ratio. So Jain will get 3,250, Gupta will get 1,950, and Malik 1,300. Then let us prepare the capital accounts. Capital account of Jain, Gupta and Malik is ready. We can write the opening balance first. Opening balance is given in the question itself. So in the balance sheet it is given 40,000, 60,000 and 20,000. Then accumulated profit also was there in the balance sheet. So that also can be shared among the partners in their old profit sharing ratio. Okay. Now revaluation loss will be debited. Loss will be debited to all the partners capital account in their old profit sharing ratio, that we have already calculated and now debited. Now next turn is regarding goodwill. So we have to, goodwill is directly given here. We have to find Malik's share of goodwill, and that will be shared among contributed, that will be paid by remaining partners in their gaining ratio. So what we have to write first? We have to find out the gaining ratio. So gaining ratio we can calculate here. We have given with old ratio and new ratio. Yes. So gaining ratio is equal to old ratio minus, sorry, new ratio minus old ratio. So gaining ratio, that equation we can write here. Then Jain's gaining ratio we can calculate. His new ratio is 3/5 and old ratio is 5/10. So Jain's gaining ratio, gaining share is 3/5 minus 5/10 is equal to 1/10. So like that for Gupta, 2/5 minus 3/5 is equal to 1/10. So what is the gaining ratio? Yes, gaining ratio is 1:1. Okay. Gaining ratio is calculated. Now let us calculate goodwill. Goodwill, calculation of goodwill. Then Malik's share is 2/10. So Malik's share of goodwill is equal to 9,000 into 2/10. That is 1,800. Yes. Okay. Then this will be contributed by the gaining partners. That means Jain and Gupta. So we can write the journal entry for understanding purpose. We will write Jain's capital debtor because he has to pay. Jain and Gupta has to, they have to pay. So Jain's capital debtor 1,800 into 1/2, half he has to pay. So Jain's capital debtor 900. So that is written here. Then next Gupta's capital debtor again 900, equal share to Malik's share, Malik capital 1,800. Is it clear? Okay. Now let us prepare the capital account. Sorry, capital account, we can enter the adjustment, this goodwill adjustment. So in Malik's capital we can write by Jain's capital and by Gupta's capital. Jain's capital 900, okay, and Gupta's capital also 900. Okay. Now this is to be debited in the capital account of Jain and Gupta. So we will write there to Malik's capital in Jain's capital and Gupta's capital 900 each. Okay. Then now we have to write the balance of cash to be paid to Malik. Malik has to be paid 16,500 rupees immediately. So we have to write the journal entry for that to cash 16,500. Yes. So that money is to be paid to Malik. That money who has to bring? Jain and Gupta. So they have to bring the money. Therefore, it can be credited in their capital account. In which ratio they are bringing? 3:2. That is their new profit sharing ratio. So in their capital account, we can write by cash. How much? 9,900 and 6,600. Okay. So that amount is written. Then we have to find out the balance payable to Malik. So we can total Malik's capital first. So Malik's capital credit side is more 23,850. That will be taken to a debit side and can find out the balance. Balance 7,350. And that will be transferred to his loan account. That is what given in the adjustment. So we can write to Malik's loan. Okay. Now we can balance the remaining partner's capital account. We can total their accounts. Okay. Credit side is more. That will be transferred to the debit side and we'll write the balance here. Okay. What it is called as? Yes. Closing capital of Jain and Gupta. So to balance carry down. Capital account is clear. The adjustment of cash paid to Malik and that is brought in by Jain and Gupta is clear to all. Yes. Now we can prepare the balance sheet. Balance sheet also is ready here. We can write asset one by one. Cash we have 5,500. So you may be thinking that Jain and Gupta has brought some cash, so that also to be added. But we have paid to Malik the entire cash. So if you write separately also, you can write in brackets opening cash 5,500 plus 9,900 brought in by Jain and 6,600 brought in by Gupta minus 16,500 paid to Malik. Then you will get 5,500. Otherwise, you can prepare cash account also. Even though you will get the same amount. Then bills receivable. Bills receivable has no change. 23,450. 23,450 will be written. Then sundry debtors. Sundry debtors has a provision for doubtful debts of 1,700. So we can write the value of sundry debtors inner column less provision for doubtful debts 1,700. So outer column 25,000. Okay. Then comes stock. Stock has change in the value. Now it became 20,000. Earlier 18,000. 100 was there. Now it is changed to 20,000. Okay. Then bond. Bond has no change. Bond can be written as it is. What is bond? The investment in the bonds issued by government institutions. Bond is just like a debenture. So debentures, if we invest money into debenture, it will be written here debenture. So instead of that, the debenture issued by the government organizations, government institutions are called bonds. Government institution or semi-government institutions. So if we invest the money into the bond, that will be considered as asset here because it is an investment. Investment, you know, it is asset. Okay. Then office furniture is written. Office furniture also had a change. So 14,250. Then comes computer. So computer can be written next. So computer became 13,200. Then plant and machinery. Plant and machinery, it has, that also has a change. So now it became 23,530. Then the last item, land and building, that also reduced it to 20,000. So that is written. Okay, so all assets over. Now let us start with the liabilities. Creditors has no change, 19,800. Then comes telephone bill outstanding. Telephone bill outstanding, we had 300 rupees. So that can be written. Then comes accounts payable. Accounts payable, we have 8,950. 8,950. Then we have to pay money to Malik. We have transferred some money to Malik's loan account. That also a liability. We are writing that in the liability side. How much? 7,350. Okay. Now capital accounts can be written. Capital accounts of Jain and Gupta, their capital account balance 54,125 and 68,775. So total capital 1,22,900. So let us close the balance sheet. Liability side 1,59,300. Same amount we will get in the asset side also. Okay. So the speciality of this question was the amount payable to the retiring partner will be contributed by the remaining partners in their profit sharing ratio. Okay. I hope all of you understood this. You can solve the similar type of questions from your reference book. Okay, thank you.